scene with the lean and a pocket full of green. The green doesn't symbolize a man on the top, but Roman top last year was a shot. The tone of the pop like could shook your butt. Kids are screaming the media says what? Kind of music is this for you? The dance from the man with the plan and the band demands you. Give me smack in the crack for the whack for the ball and the knock for the smile like that. Leave the knife and the gun in the store and they got temptation sent by the vision. Facial game for the pain, he's a new breath in your heart and mind. Never forget yourself. Walking so when you walk in, you don't just want black on black. Remember that it's important.
All right. That's enough of that. All right, we just got down. We are ready. Episode 33 of the Qierre and Wesley Show. Thank you guys for tuning in. My name, I am the realtor and author of the Blueprint to Successfully Selling Your Home, Qierre Funky Fresh McGlory. Along with me, the business partner, my lender, Mr. Moneyman himself, and actually home loan sales manager, Mr. Wesley, Run DMC Oliver. How are you doing today, sir?
Excellent. How are you?
I'm doing well. Feeling funky fresh today. And today we have a very special guest, good friend of mine. He's a fellow member of the Anaheim Chamber of Commerce. He's the ambassador of the Anaheim Chamber of Commerce. He's a reverse mortgage specialist. He is notorious Jeff Krolosky.
There you go.
How are you doing today?
I'm doing great.
Yes, and for those, I totally forgot to mention that he is not just a reverse mortgage specialist. He's also a rapper, ladies and gentlemen. He is also a rapper. So before we talk about the truth behind reverse mortgage, we gotta give you the spit. We gotta give you the spit. We gotta give the people what they want. So I'm gonna turn to you, sir.
All I got to say is 1, 2, 3, 4, 5. Citizens Lending Group is all the way live. Reverse mortgages are what we do. All of my clients are all old school. So if you know a senior that may need help, have them check us out. We've got a 5-star Yelp.
Woo! Oh! Spin that fire.
That's what I'm saying.
That is how we start the Fridays off, ladies and gentlemen. Woo! Now, who's got to follow that?
Qierre, you can get down, my brother.
Oh, man.
You can do it.
Sure. Wes, you want to go?
Oh, no. I have no skill in that.
Man. All right.
Do it.
All right, let's see what we can do. All right. I'm about to spit this flow to help you get up and go out your seat and lose control. Welcome to the Qierre and Wesley Show. We about to blow. We give entrepreneurs like Jeff the opportunity to promote their business and help them grow. We love to give back. We love to volunteer. It's a passion of ours. So each month, we always take that time. I'm a realtor. I help clients buy and sell real estate at its best. If you don't believe me, please put me to the test. I strive for excellence. My pursuit is perfection. I never stop learning. I move on to the next lesson. As I end this rhyme, I would like to say, I hope each and every one of you have a great Friday.
Woo! Drop that mic. Nice. Wait.
Can't say anything else after that.
No, just drop the mic. That's it.
I know. I'm on mic, but okay, I just dropped it. All right, perfect. Yes, so we had some fun. Now, for those of you that may not know what reverse mortgage is, I have a reverse mortgage specialist here today and is going to shed some light because, if you listen to the news, maybe listen to some people, unfortunately, reverse mortgages kind of have a bad rap. And I'm not talking about the rap that I just spit because that was hot fire. But I want Jeff to be on because I believe in what he does. I believe in reverse mortgages, and he's definitely the best I know. And he's definitely going to shed some light so you guys can actually understand what a reverse mortgage is, why it's important, who it can benefit, and it's not as bad as the media makes it. So we're going to shed some light, and we're going to share the truth about reverse mortgages. So, as the phone rings, love that. We'll go back on here. Sorry about that, folks. Tell you, we do this at the same time, and yet I still get a lot of calls. It's so funny.
He's in demand.
You think, I'm just saying, people. Just saying. So let's connect back. All right. So we are back. Sorry about that interruption. All right.
It's a live show.
What's that? Let's switch camera on. All right, perfect. Okay. Now, for most people, they may not know what a reverse mortgage is. let's just start with the basics. What is a reverse mortgage?
Well, a reverse mortgage is a program, it's a government program from FHA, Federal Housing Administration, designed specifically for seniors.
Seniors? Now, what's considered a senior?
Anybody 62 years of age and older.
62 and older. Oh, okay. Okay.
So it's for people that have equity in their home. It's for people that want to stay in their home.
Okay.
So
when you say equity, like, is there a certain percentage of equity someone needs to have?
Generally, yes. It needs to be at about 50% of the value of the property. Okay. So the FHA limits are $679, $650. That's the FHA limit on value, and we're able to loan about 50% of that value to the seniors. Now, it depends upon the age of the individual.
Right.
Somebody that's 92 may receive more equity than somebody that's 62. It's the numbers game.
Oh, I see. Okay. Yeah. So, like you said, someone that's 62, and it's really designed to keep a person in their house. So, and it has to be about 50% equity?
Right.
Okay, perfect.
So for some people, what we're doing is we're eliminating a monthly mortgage payment. For other people, and it's not eliminating it, it's deferring that payment till years ahead.
And when you say years ahead, like, is there like a certain time?
No, it's a lifetime loan. They could live to be 130, and that interest would be deferred.
So you're saying that this reverse mortgage that someone does in their 62 and over, they can live in their house and not have to have a mortgage payment?
Right.
So that means they don't have to pay their mortgage.
Exactly. So the only time that this loan is actually due and payable is number one, if they decide to sell that property, they can sell at any time. There's no prepayment penalty.
Right.
Or number two, when the last one of them, either husband or wife, passes away, the property would go to their trust or their kids, and they could then decide, are they going to refinance that property and keep it? They would do so by paying off the bank.
Right.
Or would they sell the property, pay off the bank, and keep the remaining equity?
I see.
So those are the options when the time comes.
So it's not a device to trick senior citizens into giving their house away before their kids can get it.
There's no tricking here. In fact, once I educate a senior about the program, they actually have to go through a third-party FHA-approved counselor. And that counselor is going to make sure that I've done my job educating them so that they know what they're doing, so nobody can ever say, I didn't know what I was doing.
Right.
Oh, perfect.
So they're going to give them the ugly truth.
Exactly.
Yeah.
We give them the truth, and then they verify that truth.
Right.
Okay, perfect. Now, like you said, like, if the people do pass away and it goes to their kids, now if this, they stop paying 20, 30 or plus years, I would imagine, the interest and everything like that. I mean, wouldn't it be possible that the home would owe more than its value?
Everybody thinks that.
Yeah.
So there's a new rule. It's called the 95% rule.
Okay.
You'll never owe more than 95% of what that house is worth.
Wow.
So that's number one. But the true reality, I go over what's called an amortization chart.
Okay.
So that we can see that 10 years down the road, how much equity is mom really going to have when she passes away?
Right.
20 years down the road, where are you going to be? Now, the national average for appreciation in the United States is 4%. We know that we've had double here in California. In the last year to year, it's been 8.4% here in Orange County.
Right, exactly.
So things are a little bit different. So in the real world, it continues to stay about 50% of the value of the home.
Okay. And if I remember correctly, the children or the heirs have the ability to also buy it at 95% of the current value, right?
If they want to.
If they want to.
So if they had to sell it, there's still that portion of equity that you'd have to pay a guy like Qierre to sell that house successfully so that the kids would never have to come out of pocket with any money.
Right. That's great. Yeah. So I also heard with reverse mortgages, people can actually use those to purchase too?
There is a program now for purchasing, and the way that it works, the most common people that I've seen using this are people that are selling the big house and downsizing to a smaller place. And depending upon the age of the individual senior, they can actually put about 50% down on the new home, never make a payment, and live there the rest of their lives.
Right.
Wow. I mean, that's very beneficial because I would imagine there's probably a lot of people out there, that are older and they live in these, large homes, and a lot of their kids and grandkids and everyone's moved out. and they just live in this big house, and it's unfortunately sometimes it's a little too much for them. So it's nice to actually have that ability to actually be able to downsize.
Well, you're exactly right. I had a client in Orange Park Acre recently, and he hurt his back. Couldn't take care of the big property anymore.
Yeah.
Right.
So I think they ended up selling for 1.4 or 5. They owed a couple $100,000 on the house. Within the sale, they paid off what they owed. They bought on the corner down here off of Catella and Cambridge for a house in the 6s.
Okay.
And basically put about 50% down, and now they'll never make a payment again.
And they got to keep the rest of the proceeds from the sale of the other.
As an estate.
Right.
Oh, wow, that's great.
That's why people do that.
Yeah.
Yeah. Now, remember, there used to be a rule. I know it's changed, but there used to be a rule that both applicants had to be over 62. But now you can basically, have your 25-year-old dream girl, right? And she'll still be okay.
Or dream guy. Oh, hey, man, you want to be fair. Or dream guy.
Yeah, of course.
Dream girl or dream guy.
And you're exactly right. It's now called the non-borrowing spouse.
Okay.
So here's a quick example if you've got the time. I had a client that came in from Moreno Valley.
Okay.
Ali was 71,
Right.
and he brought his wife, who was 38,
Okay.
and they had 4 kids under 5 years old.
Wow.
I couldn't make this up. So the way it went down is we were able to make the loan even though she was underage.
Right.
Now the non-borrowing spouse can actually stay on when the older spouse leaves,
Right.
Wait.
passes away.
So, hold on. So, the spouse that actually qualifies for the loan passes away, and the spouse, obviously, if she's not at 62, she technically doesn't qualify for it. She still stay in the house?
With this new non-borrowing spouse rule,
Now, does she have to make payments?
no.
Wow.
So
Okay.
what they do is they calculate the amount of money that can be received based on the age of the individual.
Mhm.
So it's a lot less than Ali's age of 71.
Right.
Okay.
But when Ali does go, she can live in that house the rest of her life. No one can ever kick her out.
Wow. That's great.
So if there was something bad in years past, what they and what you were alluding to is they used to take that younger borrower off the title of the house. But when the older spouse passed away, usually they lose the income,
Right.
and she would have to sell the house
Right.
or refinance it. But it's hard to refinance when you've lost that income.
Right.
Well, absolutely.
So if there was something bad, it's no longer bad.
Right.
The 2 things that we just touched on is the non-borrowing spouse that used to be bad, no longer bad.
Right.
And the other is, would you owe more on the house than the house is really worth? Not with the 95% rule.
Right.
Yeah, and when you say 95% rule, just for people that may not know, like, what do you mean by 95%?
You'll never owe more than 95% value of the home.
Okay. So, value of the home, like, how do you guys come up with the 95%? Like, what's the process?
Well, it just like if you were going to sell a house today.
Okay.
Let's say the senior passes away.
Right.
We get an appraisal on the house.
Okay.
We look at what's the unpaid balance of the loan.
Okay.
And even if it is more, it doesn't matter.
Right.
Because with this new 95% rule, nobody has to come to the party,
Right.
to the table, and write a check.
That's great.
Yeah.
So the problems that were once bad are no longer bad, and it's because FHA has stepped in. They've regulated this particular program.
Right.
And it's turned out to be a good thing because people can't be gouged. There's
Right.
a word, gouged. And seniors were being gouged for fees and
Right.
the cost of the loan and so forth. So that none of that happens anymore. So that's a good thing.
Right. So essentially, they came out with a product. There were some wrinkles in it. There were some blind spots. And as typical with our government, they kind of realize over time where those wrinkles are. They continue to improve the product and make it better for people.
Exactly.
But unfortunately, there's a group of people who stuck with the narrative of when the product first came out.
Right.
They're still out there on the mountaintop screaming it, and things have gotten much better.
Well, that's why I'm out here educating the public.
Yes.
Because once the public becomes educated on the changes of the program, then they can come to a conclusion on whether or not this can help their situation.
Right.
It's not uncommon for people to call me on a daily basis and they say, Jeff, we're on a fixed income but we run out of money on the third week of every month.
Right.
Oh, wow.
What are they eating? We hope we can help these people.
Right.
So you're saying, okay, so let's say I'm there. So you're actually able to get people money?
Yeah, because there's two different situations.
Oh, okay.
One situation is that we've got a husband and wife and the house is free and clear.
Mhm.
They're equity rich but cash poor.
Mm-hmm.
Okay.
So what we're able to do is establish a line of credit so that they can draw from that house and never make a payment against that line of credit.
Wow, wait, so hold on. They can withdraw from the house and still not have to make a payment.
The payment or interest is deferred until the last one passes away.
Oh, okay.
So it's really deferred, but yes, there is no payment while
Mhm.
they're alive.
That's great. Because, I mean, like you said, it doesn't come due until the second person passes away. And if both people pass away, it's not going to affect them anymore because they're no longer here.
They're
That's
gone.
great. Yeah.
So their family can now make some decisions on whether or not, A, they're going to refinance and keep the house, the loan
Mhm.
gets paid that way,
Mhm.
or are they going to sell the house, pay off the loan, and keep the remaining equity?
Right.
Either
Yeah.
way, the loan gets paid off.
Now, are they required to maintain their hazard insurance and their property tax?
There is a requirement that they are responsible for, and that's part of the counseling, to make
Mhm.
sure that they're very aware that they're responsible for property taxes, homeowners insurance,
Mhm.
and homeowners association if there is one.
Right, of course.
Okay.
So those are three things that they are responsible for, and then just the normal upkeep of the property.
Right. And those items probably come to somewhere like maybe $200 a month.
Your mileage may vary.
Right. A few
Now-
$100 a month, though.
Right. Now, we said upkeep the house. Now, are you saying that a person would have to like upgrade their house, like that kind of stuff, or what do you mean like upkeep, like?
The normal maintenance of a house.
Okay.
Usually you got to mow a lawn, you've
Okay.
got to trim the bushes, you've got to make sure
Right.
that everything is in livable condition.
Make sure the hot water heater's working.
Okay. Oh, yeah.
Double straps on the water heater is a
Yes.
requirement.
Oh yes.
Quick
Smoke
strap.
detectors in each bedroom, that's a requirement.
Yeah.
Carbon monoxide detector in the hallway, that's a requirement. But it's a safety requirement designed to
Right.
help the seniors.
Absolutely. That totally makes sense. And it's nice, like you said, it's just kind of just the basic upkeep, just making sure that it's livable and everything's functional, as opposed to maybe having to do some type of upgrades to the house to make sure it keeps value or anything like that. Because I'm sure a lot of people probably keep that, like, we need upkeep, like, do I have to like upgrade the house and
General
make
maintenance.
sure, but you're just talking about general maintenance, just making sure the house is still livable
Keep it living.
and safe. With the smoke detectors being, in every living and every room, as well as the bedrooms, and a carbon monoxide detector being on each level and everything like that. And the water heater being double strapped. These are things that we tell our clients once we get into escrow or before. You let them know, like, hey, once we do a home inspection, we're going to make sure these things are taken care of, because the appraiser is going to go out there and look to make sure the smoke detectors are in each bedroom, as well as the carbon monoxide detectors are in each level. And they'll make sure that the house is, the wire heater is double strapped. Because if it's not, then the appraiser can leave and not appraise the house.
And then
And
you
you
got to
pay
put
them
him in
fee.
and send him back. And he's got to
Exactly.
sign off on it. So
Exactly.
And that's at a cost.
Exactly. It's at a cost.
Nothing's
Exactly.
free.
Nothing's free.
Yeah.
Absolutely. Absolutely. Yeah. So like I said, so with reverse mortgage, obviously, if you in a situation where you need money, you can actually withdraw from it.
exactly.
And you said now the money that you're withdrawing, do you have to pay that back?
Well, number one, it's not taxable for ordinary income because it's a loan. And
Okay.
it doesn't affect anybody's benefits, whether it's
That's great.
Social Security, pension, whatever.
Medicare.
Right. So it doesn't affect any benefits.
I mean, that's great. I mean, I'm sure a lot of people are thinking, because obviously, for certain benefits, Social Security, if you file early, you're limited in terms of how much income you have, and if this money you're pulling from your house is considered taxable income, and like you said, it's not. So you can withdraw whatever. Actually, question there. So is there like a limit of how much you can actually withdraw on a monthly basis?
Two ways. You can set it up so that you can draw money out for a 10-year period, a lifetime period.
Okay.
I haven't seen that happen in probably the last 8 years because most people want to be in control of their own money in
Okay.
the form of a line of credit.
Okay.
So that line of credit gives them a lump sum in the very beginning,
Mhm.
and before they can touch that remaining balance, a year needs to go by,
Okay.
and then they can control the remaining portion of that
Right.
money as well.
Okay.
So I think that FHA did that, I think 2 years ago, and the reason is we have more people. We have 11,000 people a day in America turning 62. So we have more people that want this, and they're giving a little bit less cash to more people,
Right.
to make it available.
Yeah, absolutely.
And that's what's going on.
Yeah. So like you said, a lot of your business that you're dealing with, do you deal with more people that are downsizing, or do you deal with more people that are actually using the reverse mortgage to purchase a property?
Both.
Okay.
So the refinance program is for people that are maybe struggling with their monthly income from Social Security.
Mhm.
Okay.
Yeah.
People that are downsizing or selling the big house and moving to something smaller that doesn't take as much to manage.
Right.
And those people are using the purchase program to purchase another home that they can live in the rest of their lives and never make a payment.
That's great.
So I think it's something that's very worthwhile. By educating the public, they can come to a conclusion on whether or
Right.
not this is going to create a benefit for their entire situation. And everybody's different.
Of course. All
Well, I mean,
snowflakes.
like you said, I mean, it's the lack of education. I think that's what affects a lot of people with them having negative views about reverse mortgage, or just being in a situation where they need help and they don't know where to turn. You know, because like you said, that example with equity rich but money poor, I think cash poor.
Cash poor.
You know, it's like I'm sure there's a lot of people out there that are probably in that situation, probably barely scraping by on Social Security, living month to month, but yet they have all this equity in this house, and they don't really know the way if they can actually, you know, take some of this money out of the house through a reverse mortgage.
Yeah.
Yeah.
So I have an interesting question. My guess is it's based purely on the amount of equity and your age. So let's say someone's 58 right now and they buy a home. 4 years from now, they turn 62. They have the equity, the 50% equity required. They want to do a reverse mortgage. They're cleared for takeoff.
Pretty much.
Okay.
Yeah, if they qualified for that loan. I mean, there are some factors. We do run credit reports,
Sure, of course.
and there's a thing called financial assessment to make sure that these people are going to have enough money to pay their property taxes and pay their insurance. So
Right.
with a financial assessment, we'll make sure that they have enough money to qualify
Right.
and pay for those bills.
But otherwise, they're not required to own the home for a certain period of time before they qualify for a reverse mortgage. Okay.
Yeah. So reverse mortgage you can use to downsize is obviously an option, or to take money so you can actually make your monthly payments, or to purchase a property. And like Wes was saying, you buy a property at 58, 4 years later you turn 62, and all of a sudden you get a reverse mortgage.
Hey, if you've got the equity, it's not a bad way to go.
Yeah. Now, is there like a certain cap in terms of an age? Like, hey, like once you're beyond this point, you can't qualify for reverse mortgage anymore.
My oldest client was 100 years old.
Oh, wow.
Yeah. Nicest guy. He passed just 4 days before he was going to turn 101.
Wow.
Wonderful guy. Very affluent. Very, very affluent his whole life. And when I asked him why he was getting a reverse mortgage, he said, Jeff, I never thought I'd outlive my money.
Right.
So you just never know.
Yeah.
Some people are struggling to make that mortgage payment. So with those people, we're eliminating the payment. Now they've got money to live on.
Yeah.
And, you know, bad things can happen to good people. I had a client that called me, and she said that her mortgage payment was $1,700 a month, and her Social Security was $1,700 a month.
Oh, geez.
Right.
And I said, well, what happened? And she said, well, a year ago, I had $150,000 in the bank. My husband was sick. I used that money to keep him alive,
Right.
and then he passed away. So his income went away as well. And now she's in a situation where she's getting $1,700 a month, and her mortgage payment $1,700 a month.
Mhm.
We were able to eliminate the mortgage payment for the rest of her life, and now she's got that money to live on. So living is not a burden.
Right.
Yeah.
So we're able to help these people that maybe were thrown into a difficult situation through no fault of their own.
Okay. And are you primarily working with Californians, or are you in other states?
Good question. Right now, we deal with the state of California,
Okay.
state of Florida, a lot of retirees there,
Oh yeah.
I've heard that before. Once or twice.
and Pennsylvania.
Okay.
So those are the states that we're focused in right now. Largest majority of our business is right here in our own backyard in California.
Right.
But surprisingly, we do a lot of business in Florida as well.
Well,
Yeah.
I'm not surprised at all.
Yeah.
Matter of fact, if the show was still on, I could see a scenario where the Golden Girls, where Blanche was actually doing a reverse mortgage on one of the episodes.
Yeah, absolutely.
Here we go.
That's
Yeah.
cool.
Yeah. Well, I would imagine. I'm sure a lot of people are in that situation, though. I mean, like you said, the lady had, 6 figures in her account. All of a sudden, her husband became ill. All of a sudden, they had to take a lot of that money to take care of his medical expenses, and then unfortunately he passes away, and then they're just kind of left, living paycheck to paycheck. So I'm sure a lot of people that are watching this, or a lot of people that will watch this later, I'm sure they probably know people that are, in those situations.
So I have another question, and I know this from early on with the reverse mortgages. The biggest deterrent to the reverse mortgages were usually the children, right? Because they were afraid they were going to lose their inheritance, and their parents were being taken advantage of. So has that changed for you? And what is the biggest misconception that the children have that you have to deal with when you should talk to them?
Well, you asked me a handful of questions right there. Number one, is it still an issue? And it's a double-edged sword,
Mm-hmm.
because some kids are the ones that actually call me
Right.
and say, my mom needs this.
Right.
There are other kids that maybe are sponging off mom and dad, and they don't want them to have it,
Right.
thinking they're going to lose equity. But what I generally do is I sit down with anyone in the family that my clients are comfortable having listened to the reverse mortgage scenario, and show them over a 10-year period, over a 20-year period, where their equity position is going to be, so that everything is on the table and everybody knows.
Right.
I had a client that called me. He was a superintendent of schools up in the Bakersfield area, and asked me to meet him and his mom and his sisters. Well, he had 7 sisters. So I met with them, and he's the oldest son, so he's Hispanic, and he was the man. And I sat with him and the sisters and the mom and explained everything to him, and the sisters looked around and they go, Mom needs this. And then they looked around again and they said, hey, Jeff, you're sitting in Dad's chair. He's been gone for 1 year today. And Dad wanted it.
Right.
Oh.
Because what happened is Dad's income, when Dad passed, his income went.
Right.
She was receiving $1,300 a month in Social Security, which was probably his.
Mm-hmm.
Mortgage payment was $1,100 a month.
Wow.
So she was strapped,
Mm-hmm.
and those kids had to all pitch in
Mm-hmm.
and be involved. So by doing the reverse mortgage, we eliminated the mortgage payment. She's got some extra money to live on.
Yeah.
And the first thing she wanted to do is visit family back in Mexico that she hasn't seen in 25 years. So she was
Right.
able to do that. But everybody's a little bit different. Everyone's story is different.
Right.
So
Absolutely.
there's no right or wrong. It's just, does it fit?
What's right for you?
Right.
That's it.
Right.
Yeah. So Jeff, do you speak Spanish?
Poquito español.
Okay.
Spanglish.
But you do have people that do speak Spanish.
I do
Just
have
in case
Spanish
someone
speakers.
has family members, that speak Spanish, you do have those people.
Absolutely.
Perfect. Yeah. That's great. Yeah. Well, is there anything else you'd like to share?
Wow. I just appreciate you having me today.
Well, of
Nice to
course.
see you, Wes.
Yeah. Well, I mean, the show's about, providing education so people can make informed decisions. And like I said, I think reverse mortgage gets a bad rap. Every time someone mentions it, it's like, oh, just reverse mortgage. It's kind of like, whoa, but what were you able to explain today, just so many benefits and how it can really help people, because, it's not just, hey, like Wes was bringing up as an example, hey, you're messing up my inheritance because, the equity is going to be shrunken out of this house. But it's like, hey, this money that you take out of this house can be used to help with your parents' monthly bills. They can help with their insurance, their medical procedures or anything like that. Or if they need to downsize to something smaller, or they want to, purchase another property. So there's so many different benefits of it. And like you said, with a non-borrowing spouse, that's huge.
Yeah, that is huge.
The person doesn't have to be 62. They can live in this house, even though the primary person that qualifies passes away, and they don't have to make a payment on this house ever. That's huge.
That is,
Yeah, absolutely.
So the things that were negative are not negative anymore.
Right.
The 95% rule, you'll never owe more than the property's worth.
Right. That's
the
great.
non-borrowing spouse, those are two things that we keyed in on today that maybe were negative in the past but are no longer.
Yes, and I like the fact that you actually make sure to get the children involved initially on. I like that, as opposed to just, okay, great, when can we meet? You go, hey, let's get your children involved so everyone can come together and learn and why this could be a potential option for you guys, so everyone can kind of come to a consensus. So there's not like, hey, mom, you did this behind her back. Like, why didn't you, consult us? And that Jeff guy just took advantage of her.
We're not slipping anything in on anybody. If somebody says I have a CPA, I want to talk to them because a lot of my business comes from CPAs, trust attorneys.
Right.
So people that understand the product and program.
Right.
Fiduciaries. I just had a client that was a fiduciary. She says, my client needs this because she's got some medical bills. We need the money to keep her alive.
Right.
Can you come over and help? Can you explain it?
Right.
So in that particular sense, we're using the money to keep her client alive, and it's all working out.
So it's literally life and death in that situation.
For some people, it could be.
Yeah. Yeah.
Wow. Well, if you guys have any questions for Jeff, his contact information is going to be on this post, so his information will be all down there. And we're also going to save this so you can share it, comment, like it. If you want to replay it, you can replay it as many times as you want because it'll always be saved. I want to take this opportunity again to thank Jeff for taking time out of his busy schedule to be with us today.
Thank you.
And also spin that hot fire rap session did earlier. So just in case you're catching the show a little later, make sure to watch the beginning because he dropped some hot fire. So
is this Oreo Friday? I had to say it.
I love it. Yeah.
On my side, it's Cracker Wrap. Yeah. You guys know. Right.
Oh, I love it. But like I said, definitely thank you guys for tuning in. Thank you for your comments, likes, and shares. Hope you have a great weekend. And like I said, if you guys know anyone that needs reverse mortgage information, if you need him to speak to anyone, I highly recommend Jeff. He's a great guy. He breaks things down into layman's terms. And he's a fun guy to be around. Let's be honest. He's a fun guy to be around. You're not going to be bored sitting next to this guy. He's fun. He's energetic. He makes things fun, and he's a well, warm-hearted individual. You know what I mean? So he'll make you get the warm and fuzzies. You know what I mean? So I highly recommend Jeff. Like I said, thank you guys again for tuning in. Hope you have a great weekend. Make sure to watch the beginning of the video because, like I said, he dropped some hot fire. I throw a little bit of hot sauce on there. You know what I mean? This is just a little bit. You know what I mean? But yeah, so hope you guys enjoyed the video. I'll let Nessa sign out.
Be proactive, be assertive, have a great weekend.
All right.
Thank
See
you
you guys later.